Good afternoon. Thanks for joining Adelaide Capital. Today we have Craig Parry and Steve Blower from IsoEnergy. IsoEnergy is an exploration company for uranium in the eastern Athabasca region in Saskatchewan. So here to talk about the company is Craig and Steve. Before we get started, a couple things. First off, if you have any questions, we will take questions at the end. Just input them in the Q&A box, or you can email them to me, deborah@adcap.ca. And this presentation will contain forward-looking statements. If you don't know what forward-looking statements are, perfect. No, I'm just kidding. They're on the company's website. Just look at the presentation. The presentation is on the website, but the guys will run through it with you here today. So thanks for joining me, Craig and Steve. Welcome to Adelaide Capital.
Thanks, Deb. Good to be with you again.
Yeah, well, we had a nice interview. I think it was a week and a half ago. I promised not to mock your beard, but I do notice that you cleaned it up for me, so appreciate that. And without further ado, I'll let you guys put your presentation up and run through things. I believe you put out a corporate update this week, so maybe you want to start with that.
Yeah, absolutely. So thanks, Deb. Yeah, it was very, very hard to get Amazon to deliver a trimmer. So I finally got one. So we're trying to sharpen up our act a little bit here. So I'll just share the screen now. And thank you for having us back on. And I know you're having your uranium week. You've had Next Gen on, of course, Lee Courier and Travis McPherson there, and of course Lee is our chairman. We're a spin out of Next Gen, so it's great that everyone's had the opportunity to hear that wonderful story. One of the I think not only the great stories in uranium and uranium exploration, but also in our industry completely. So fantastic for everyone to hear that story and where they're at with the great progress there. And then you had Warren Irwin on, of course, as well. And Warren's fast becoming a legend of uranium investing. Warren has made a fortune for himself and his investors there out of Next Gen and his investment. He's been invested in ISO in the past as well, and is a good friend of ours also. So I think you've got a team.
Oh, sorry to interrupt you. We're actually having all of you back on in 2 hours, just over 2 hours, so we can grill you some more. So yeah, it'll be a fun panel. So for everyone in the audience, make sure you tune back in at 4:15. Sorry to interrupt you. I'll do it.
No, very, very good. And now, they were the lead-in acts. Now the main event, IsoEnergy. So, look, we're a spin out of Next Gen. Now, you mentioned the forward-looking statements. There's going to be quite a few of those in here because there's a hell of a lot going on, and we've got some exciting stuff ahead of us that we want to talk to investors about. As you mentioned there, Deb, we put out an update on what we did over the winter drilling program, those fantastic results we got there, and where we're heading over the summer and the coming months and indeed the coming year and what we're up to. But before we get into that, it's just worth touching on, and I think a lot of people who are listening or watching will have seen some of this stuff. But of course, COVID-19 an absolutely tragic time for humanity. And so devastating. But oddly enough, out of that, we're seeing something of a uranium bull market emerge because, of course, demand for uranium hasn't dropped off materially at all. But the supply side, the challenges of the supply side are being found out writ large. Of course, there's 441 operating or operable reactors around the world today, and only 12 mines around the world provide 90% of the fuel that go into those reactors. So if there's a supply side disruption, then things can change very quickly, dramatically. And we saw that back in 2005 through to 2007 when we had that giant uranium bull market at a time when guys, famous investors like Rick Rule. Rick likes to say that during that phase, that boom market in uranium in that period, the very worst he did in his investments in companies then was 21 times his original investment, not 21%, 21 times. And of course, that was partly driven by the flooding of that big Cigar Lake mine up in the Athabasca, which has coincidentally very near to our projects. And we've seen the same conditions here because of COVID-19. Cameco's closed its production at Cigar Lake, its last remaining operating mine. We've seen the Namibian government close all of their production for a period of time. And then probably the most important thing to our mind, the world's biggest producer, Kazatomprom, has stopped producing uranium at its facilities as well. And so we think, that's removed somewhere of the order of the market was already challenged. It's £194 million per annum market. The primary supply going into that market is about 120 to 130 million pounds, depending on who you talk to. So it was already dramatically undersupplied. And now we've seen of the order of 40% of that production cut back on a month-to-month basis over the past month. And of course, we've seen the earliest of stages of the effect of those cutbacks happening in the spot market. We've seen uranium price run from $23.50 a pound a month ago all the way to $34 a pound, so up 45% so far this past month, which makes uranium the best performing commodity globally. And so you've seen a real rally in prices. What we haven't seen yet, we've seen a rally in equity prices to some extent, but we really haven't seen that factored in fully yet. So we think that's coming. I think there's still a few people to be convinced, a few sort of generalist investors, particularly generalist funds, to be convinced that this rally will be sustained. But we see that coming. Steve and I have had probably the busiest 2 weeks in terms of fielding investor calls and investor interest into ISO and into the sector in the past 2 weeks. We've been on the phone more or less constantly from 6 a.m. through to about 10 o'clock at night from European investors, North American investors, and down into Australia and Asia at night. So we can see something's happening. That interest is building. Companies are raising money. I've never had so much money thrown at me in my life, and we're not taking it. That's a very important point that we want to get across. We're well funded. We've got $3.5 million in the bank, which is enough to get us through our summer program. So we're not interested in financing, and we've got NextGen there. NextGen's a 52% shareholder in the company. Lee and the board at NextGen have supported putting over $5 million into the company in the last two financings. So we've got something of a backstop there. So I'm in this very fortunate position as a CEO that I don't have to spend too much time out there looking for money. I can get out and talk the story, and we can do all of that work that we need to do. So we're in something of a unique position. But, the crux of all of this is we're in the earliest of stages of what we think will be an absolutely spectacular bull market. And one last point to make before we get off that topic and that slide is we heard from Kazatomprom's CEO, Mr. Primitov, last week. Very interesting news. He announced in an interview with UXC that they won't be supplying product into the spot market this year. So you've seen the carry trade dry up. Traders aren't getting any product. Those guys have got to go and find something else to do with their time. And he's not putting product into the market. And, of course, they were the big provider of product to that spot market. Now, the spot market, of course, has always been a noisy but largely irrelevant data point. So we expect that the spot market will run pretty hard off the back of all of that news as that product dries up in the market. And, of course, the run-up in prices so far have really been a factor of the announcements of those closures and curtailments. When that product really disappears, any stockpile product with producers and the like disappears over the coming months, that's when we think we'll see uranium prices really take off. And of course, the objective of the producers now is to get long-term contracts in place at north of $50 a pound. Cameco's been very upfront about that in its in all of its quarterly calls over the past 18 months, that they want to see at least $50 a pound for their long-term contract prices. So we absolutely think that that's where the uranium price, spot price goes. The contract price is already up there. We know that. Cameco have intimated, not stated, but intimated that they've written or rolled over contracts at north of $50 a pound. So, that's a key point that we want to get across to people. The real price of uranium today is $50 a pound. The spot price is just playing catch up there. So that's our point. So And then look, there's a few other points we like to make. If you like the thesis of uranium, you think we're about to go into a bullish phase of the market, which we absolutely are. There's a couple of interesting points there. The combined market capitalisation of our sector today is only about $10 billion. Go back to 2010, the combined market cap of our sector was about $150 billion. So the beta potential in the market alone, as all ships rise and as prices rise, is a potential 10-bagger for investors. So very, very good fundamental investment thesis, we think there. If investors want to get set in the space, the work is already done for you. It's been a war of attrition. There's, they're really going back to 2010, probably over 500 listed and active uranium explorers, developers and producers. Today, we think that number's about 35 or 40 names. So the filtering process has been sort of Darwinian, if you like, and we've seen a lot of companies fall by the wayside. So investors, very straightforward to assess the opportunities out there and get position in those. And what we say to people is you can build a basket of companies, a portfolio approach to investment. But what we encourage people to do is look to the best names in the sector. And, NextGen obviously is the best developer out there. It's got the best asset in the world and probably one of the best mines ever to be built that they're working on there, that Lee and the team are doing a great job of advancing. And then in the exploration space, look to guys who've got a high-grade discovery, of which, we think there's one, and that's us. And you can see that there, that core box on the left-hand side of the screen. That's a core box from our winter drilling campaign at our Hurricane discovery on our Larocque East property. I distinctly remember the day, the morning that Steve rang me to tell me about that we'd pulled that out of the ground. He said, Craig, this is something very, very special. 8.5 metres at 34% uranium, it turned out to be. People, we find that many aren't familiar with what that means. But if you're to put that in gold equivalent terms, that's 8.5 metres at about 320 grams per tonne gold, or 10 ounces per tonne gold. So extraordinarily high-grade material that the Athabasca Basin is famous for, of course. And I should say that drill hole, there's a company out of New Zealand called OPAX that ranks all drill holes in any commodity across the globe each week. That drill hole sits at number one, still globally, best drill hole in any commodity drilled so far this year. I think the next best hole was drilled by a Cisco. They drilled about 2.5 metres at nearly 1,000 grams per tonne gold. So that hole's 30% better than that Cisco hole sitting in the number 2 place. And IsoEnergy drill holes occupy the bulk of that top 10 of drill holes drilled in the last since the start of this year. And you can see more of those results on the right-hand side of the screen there. So we've been ecstatic with the progress of that drill program. I won't steal any more of Steve's thunder. Steve's, the discoverer of the deposit, led the team to the discovery, and I'll let him talk about that. We still put in NextGen share price chart there. We're part of the NextGen group. I helped Lee start NextGen back in 2011, and we put that in there. It's a bit anachronistic, I suppose, in that we put it in there because people still ask, going back a year, people tended to ask you, why the hell would you explore for uranium in a market like this? And that's the answer. We started NextGen. We actually did a capital raise back in 2011-12 at 5 cents a share. NextGen's trading around $2 a share today. So in the worst possible market you could have, we've still delivered our shareholders there at NextGen over 40 times their original investment. So a discovery in the Athabasca Basin can still deliver outstanding returns despite difficult market conditions. Imagine what can happen in a boom market, of course. Paladin back in from 2003 through to 2007, I think Paladin returned its shareholders over 20,000% or 200 times their original investment. So, we look forward to those times, but we just highlight that NextGen, that you can do very well in this sort of a market. The other thing that we'd point out there is that if you were to plot IsoEnergy on this timeline, we made that on that share price chart and timeline, we made that discovery at Hurricane back in mid-2018, so about a year and a half into coming up to 2 years in the process. And if you look at NextGen there, it was really took about 2 years before we really got some serious traction in the market, and the share price ran hard as soon as we announced that maiden resource. Very important for investors to note that we're coming up to that point in time soon where we'll put out a maiden resource. So we're heading into that really exciting time for investors. Just quickly on our approach and what we're doing. So we're focused very much on the Athabasca Basin. Athabasca Basin, #1 mining jurisdiction in the world, as judged by the Fraser Institute Survey of Mining Executives. Tremendous location, of course, for uranium deposits. You'll see on our maps that the two biggest uranium mines sit very close to where we're operating. There's, of course, a huge number of high-grade discoveries there. So very, very, we think every time we look outside the basin to look at acquisitions and opportunities, we always come home to the Athabasca Basin. It's the place to be exploring for uranium. We've got a fantastic team. We're backed by NextGen, of course. We've got a board there that has, I think, in the last 10 years, an unprecedented track record of discovering and advancing a major uranium deposit. We're very fortunate to have Steve join us. Steve came to us from Denison. He was the head of exploration and led the team to discover the Griffin deposit there at Denison before joining us. And, Steve's done it again. So Steve's fast proving himself to be the Tom Brady of the Athabasca Basin. Timing, you can't get a better time to be looking at uranium investments. Equities haven't taken off yet. Uranium prices started to take off. And we think that, we're going to see some serious gains in both of those markets in the near future. So now is the right time to be getting into the sector. And then, leveraging our strengths, a bit of a catch-all there. We've got, as I say, a brilliant technical team that have made another major high-grade discovery. Look, we also, thanks to the success and association with NextGen, have been able to raise capital at a time when others haven't. And that's allowed us to do a number of things, including a number of major deals in the Eastern Athabasca. And that's important when it comes to the strategy, which you'll see. So there's our property portfolio on the left-hand side, a map of the eastern part of the basin. If you were to put NextGen's property on there, they're, of course, down in the southwestern part of the basin. What we took out of NextGen when we started ISO and spun it out, we took 5, relatively modest licenses. And since that time in 2016, we listed the company back in 2016. We raised $8 million then. And what we've been doing is putting our foot on as much of that prospective Eastern Athabasca as we can. And of course, if you look at this map, that zone that from the south to the north is about 50 kilometres wide by 120 kilometres long, contains some of the world's greatest and highest grade uranium deposits. It contains the two largest mines in the world, McArthur River Mine, Cigar Lake Mine, and then 3 major uranium mills, and very importantly, the McLean Lake Mill, which is the last operating mill in the basin today, albeit that it's on care and maintenance due to COVID-19 at the moment. And then, we're surrounded by all of that wonderful infrastructure that you need to develop a project quickly there. And very importantly, communities are very supportive. In that region, and very familiar with uranium mining, and also Saskatchewan offers access to first-rate people. Unfortunately, we've seen the closure of McArthur River Mine 2 years ago. We've seen closures of other projects there, and that means that there's a great pool of uranium mining talent available to us. And you see what Lee's doing at NextGen. He's bringing those people on board quickly and advancing his projects there. So, it's the perfect place to find and develop a high-grade uranium deposit. Our Larocque property sits up here in the northern part of the Eastern Athabasca. Our Hurricane discovery sits right there. Very importantly, only 40 kilometres from the McLean Lake Mill. And I'll let Steve talk to that shortly. And then in terms of our strategy, what we're doing, you know, Lee and the team discovering the Arrow deposit in the southwestern part of the basin in NextGen. That deposit, a basement-hosted deposit of true Tier 1 world-class size. It's a giant deposit. And, you know, those big basement-hosted deposits hadn't really been recognised in the basin prior to that discovery. We now know that, and so we're in part taking our IP, our knowledge of that deposit and how its comportment, the alteration halos around it, and all of those things, and applying it to the Eastern Athabasca. And the Eastern Athabasca, you know, predominantly only explored for unconformity deposits. And most of the exploration holes drilled out in the eastern half of the basin haven't penetrated into the basin terribly, through the basin and into the basement terribly far. And so that really opens up the bulk of the eastern half of the Athabasca for a renewed approach to exploration, looking for these giant basement-hosted deposits. And there will almost certainly be Arrow-type deposits out there. And our objective is to take that IP and go and find those. So we're putting our foot on as much of that prospective ground and following that approach. And then the other thing that we observed there 5 years ago is that the money that was raised from 2007 through to 2010-11 up until the point of the flooding of that nuclear plant in Fukushima in Japan, a lot of that money that was raised went into first pass and some second pass drilling out in the Eastern Athabasca. And what we've found in the last few years is there's a huge number of mineralised and altered drill holes that have never, ever been followed up because we all ran out of money as a sector at the same time in 2011 due to Fukushima. So, again, simply put, our strategy is just so very simple. Put your foot on as much of that ground as you can and get in and follow up those drill holes that have hit mineralisation or alteration, and any one of which could be tantamount to a discovery hole. So that's what we did at at Larocque East. We acquired that property off Cameco in 2018, May 2018, for the princely sum of $300,000 worth of stock and $20,000 in cash. Steve had a drill rig out there 6 weeks later, and 2 weeks after that, we announced the discovery of the Larocque the Hurricane Zone. So, the strategy started to play out very well for us. So that's what we've been doing. I won't steal any of Steve's thunder. I'll hand over to Steve, and Steve can take you through our discovery there at Hurricane and what all of that means. Thanks, Steve.
Great. Okay, thanks very much, Craig. So we're zoomed in now on this map, looking at the northern part of the eastern side of the Athabasca Basin, and the orange polygons, as in the last map that Craig showed, our land holdings there, with the darker orange being Larocque East, and that's highlighted, of course, because that's where the hurricane zone is. So that's what we want to talk about most. But it's developing into a large land package up in that portion of the basin. And Craig said when we started and we were spun out from NextGen, it was a pretty modest package of ground, good ground, but fairly small. So there were only about 6,000 hectares of land in the total package when we were first spun out. And we've now grown that to just about 110,000 hectares through acquisitions and through staking. And there's more of that to come. We are still adding to our land holdings. So anyways, that's why we've got a significant portion of that northern side, northern part of the eastern side. And lots of that infrastructure is readily visible there. The mills, both McLean Lake and Rabbit Lake, are on that map. The Points North airstrip, that's how we often arrive up into that part of the country, by flying up from Saskatoon. And then driving up Highway 905, about 40 kilometers, to that access trail that's marked on there as a dashed line. And that access trail runs up into the hurricane zone. It's a winter road, so it crosses some lakes, so we can't use it in the summertime. But it parallels that red band, and in fact sits right on it for part of the ways into camp there. And that little bit of red banding on the map is what we call the Larocque conductive trend, and it just means graphite in the basement rocks. And that's about all the geology you're going to get here. And all you have to know is that uranium in the Athabasca is typically associated with graphite in basement rocks. And that's no matter whether you're talking about unconformity hosted deposits or deposits like Arrow that are deeper down and in the basement. So graphite's important, so that red band is important. And that particular one is fertile. It has mineralization along it, both at Alligator Lake that you see there, and also at the Larocque Lake zone, a little further up towards our property. And so there are 15 kilometers of graphitic conductors associated with that trend that are on the Larocque East property. And so that's why we wanted to buy it. That was what was so exciting for us, a chance to buy the extension of the Larocque trend. There were a bunch of old holes on there, 23 in fact, have been drilled by Cameco. And we went and had a look at them all. And there were a couple that looked like near misses that perhaps hadn't been followed up all that well. And one of them in particular was a hole called Kerr 12. And it looked to us like maybe they had just overshot some uranium. It wasn't mineralized itself, but it had some good indicators in it. So we said as soon as we got back to that property with a drill, that would be the first target we would test. And that didn't take very long because we were already drilling down at the Geiger property on you can see that just south of Larocque East. It was a program that we had organized before we even bought Larocque East. So it was an 8-hole drill program. It was happening in June of 2018. It wasn't going all that well. The first 7 holes hadn't hit mineralization. So with the final hole, the 8th and final hole, we moved up and drilled just 60 meters to the north underneath of that Kerr 12 hole. And we hit 8.5 meters, 1.3% uranium. So we were right. It had just overshot a substantial zone of mineralization. So that was great. But it was the last hole of the program. We were out of money. It was fairly expensive work. We were flying the drill with a helicopter in the summertime. So we just decided to put on the brakes and get better organized, put a camp in, interpret our geology and our geochemistry, and then get back in with a proper drilling program the following winter. So that's exactly what we did. So that's the winter of 2019, January to March of 2019. That program went really well. We drilled a follow-up summer program, a total of about 29 holes between the 2 programs. And we just kept hitting high-grade uranium mineralization. And by the time we were done, 2019, the zone had stretched out to about 500 meters long, 40 meters across, and up to 11 meters thick. So obviously we were pretty convinced we were into a substantial body of uranium at that point. And that takes us to this last winter. Once again, that January to March period is best for drilling up in the Athabasca. So we've just come out of that and we've drilled another 24 holes. It was originally a 20-hole campaign, but things were going quite well. So it ended up being expanded to 24 holes. And we've had some remarkable intersections, as Craig pointed out. So we've actually grown the zone now to about 575 meters long, and found a new zone of very strong mineralization within it. So, and some of the highlights, as Craig has already run through, are pointed out on the right side of the slide here. The last 3 holes, in fact, we drilled 53, 52, and 51, all had grade times thickness products better than 100% meters. So truly spectacular intersections. And yeah, that hole 34, 8.5 meters at 34%, still the best hole that we've drilled there. And like Craig said, the best hole on the planet of any commodity so far this year. So next slide, I think, Craig, would be a good idea. So we're just zoomed in on the hurricane zone right now. And in fact, the western, maybe 250, 300 meters of it. And that is where the better grade is so far, although there's a huge gap. In fact, the easternmost 250 meters of the hurricane zone is actually a gap. There's a section at the far end on the east end, and then just no drilling until you get 250 meters west of that. And yeah, so but on this western end, we've got a couple of polygons in there. The yellow background is the hurricane zone itself, and then the orange polygons are the zones of much stronger mineralization. And each of the holes that is in the orange polygons is highlighted there with the blue callouts. And so you see it's spread over quite a length. It's not all tucked into one small area, and it's going to have a huge impact on the amount of pounds that are actually within the hurricane deposit. I think importantly, we're 330 meters below surface, so it's quite shallow. Craig already pointed out we're only about 40 kilometers from the McLean Lake Mill. There is no lake or water cover above us, so it's good dry ground. It's easy to work both exploration wise and we expect mining wise also. And I think maybe, you know, it's probably important to talk about what's happening in the basin with some new low-cost mining techniques that are emerging, especially for these shallow unconformity-hosted deposits. We see Denison developing their ISR strategy for mining the Phoenix deposit down the Wheeler River property. Could be a real game changer for mining these types of deposits for sure. And then there's also some new technology called Sabre that Orano, who owns that McLean Lake Mill, is developing expressly for mining shallow unconformity hosted deposits such as this one. And Sabre stands for Surface Access Borehole Resource Extraction. So they just basically drill a hole from surface. They add a jet boring tool on the bottom end, on the bit, and excavate a cavity by jet boring, and then just suck the cuttings back up with reverse circulation. So yeah, you can do it all from surface. So really neat technology. They have actually put it into play at the McLean Lake operation, have successfully excavated cavities there, and are just scaling it up and commercializing it, and that's currently happening. So yeah, a few other things to point out on that map. There are some other hatched polygons on there, A, B, C, and D. Those are our highest priority areas for expanding the zones of very strong uranium mineralization. And so you can see that there are lots of opportunities there, and those are just the highest priority ones. There are other areas on there that we want to test for that type of mineralization also. Yeah. Craig, I think that's about it. I think we should switch. Thank you very much. So that's a cross-section view now through the hurricane deposit. We're looking to the east, so north is to the left, south is to the right. There are basically two kinds of rock on that section. The top part is yellow, that's the Athabasca sandstone. The bottom part, a mixture of brown and gray, that is basement rocks. And the gray portions are the graphitic basement rocks. So that's the important geology for us. And those are the rocks that cause the Larocque conductor trend. And the contact between the two is what we call the unconformity. That's that. Yep, thanks, Craig. And that unconformity has some topography on it. It's pushed up into the sandstone where the hurricane uranium occurs. And so that's actually something that's fairly typical of several deposits in the Athabasca, including Cigar Lake. Very similar sort of geology. And in those drill holes there, so this particular section is about 25 meters to the east of the property boundary. It's the section that includes hole 34. It's the northernmost hole on there, the 34% over 8.5 meters. Then as you move to the south, to the right, the next hole is hole 40, 20.5% over 4 meters. And then that thickens back up again as we go further south to hole 52, or a nice intersection of 23% uranium over 7.5 meters. And I think the key there is that obviously that mineralization is open for expansion in both directions on that section, and those follow-up target area polygons highlight that. And quite honestly, we see this on most of the sections at Hurricane. And in fact, the westernmost 5 sections are all wide open for expansion of very strong mineralization, especially to the south. That's a picture of Justin Rodko. He's our project geologist. He and Andy Carmichael, our senior geologist, are largely responsible for everything that's happened at Hurricane, including the discovery, no matter what Craig said earlier. So yeah, next section, please, Craig. Sorry, next slide. Yeah, which is the next section. So this is just another section 75 meters further to the east, it shows a very similar thing that we just saw on the previous section. The northernmost hole, just over 1% over 9 meters. Obviously that mineralization is still wide open to the north. Then the southernmost hole, hole 51, a nice intersection, 14.5% uranium over 7.5 meters. And then in between the two is the big boomer, 20% uranium over 8.5 meters in hole 32A. So yeah, clearly more drilling required on there. Obviously expanding to the north, to the south, and then filling in the middle there also. Okay, Craig. And so, yeah, that takes me to a broader view of the Larocque East property, certainly where the Larocque conductor trend exists. And you can see the star for the hurricane zone tucked up against the property boundary there. We have also drilled a few holes this winter as we start to look out towards the east. And the eastern extent of this thing is certainly intriguing for us, and I think hugely prospective, largely because of that resistivity survey that is shown on that map that shows, so this is basement resistivity, basically a big conductive zone in those warm colors that extends out of hurricane and along the Larocque conductive trend and becomes clearly more conductive as we move to the east. So that means more graphite, more faulting. I just think it's hugely prospective for finding more hurricane-style deposits. So, yeah, and obviously, as you keep on moving around the bend, yeah, you get to the far eastern end where there is actually old showings of weak uranium mineralization, much like we followed up at the hurricane zone. So, yeah, there's lots of work to be done on the rest of the Larocque East for sure. Okay, Craig. So there it is, hurricanes in its place on this schematic diagram of the Athabasca deposits, 325 meters below surface, certainly much shallower than the big mines, Cigar Lake and McArthur River and some of the other much deeper deposits out there, and again, not underneath any water cover. Okay, Craig. Yeah, a quick couple of words on a few other high priority projects. I'll make this quick. This is Geiger. It's the one just to the south of Larocque East. And it's the poster child for what Craig was talking about earlier of old intersections that haven't been properly followed up, particularly down deep into the basement. And each one of those call-out boxes and yellow stars represents an intersection of weak uranium mineralization or uranium pathfinder minerals at the unconformity, and I think there's terrific potential here for following up, especially down deep into the basement. So we've only addressed 2 of those so far in our work. There's much more to do. This is Radio. It's about 2 kilometers west of the Rough Rider deposit. Sorry, east of the Rough Rider deposit. And Rough Rider is important because it's a basement-hosted uranium zone that was sold by Hathor to Rio Tinto back in about 2011, I believe, 2012, for $590 million. And so that geology trends right onto Radio. We've had a couple of kicks at the can trying to find another Rough Rider. Haven't had any luck so far, but there are numerous targets remaining, and we expect to be drilling that again shortly. Okay, Craig. Thorburn Lake, just 6 kilometers to the east of the Cigar Lake mine. There's a big fault that hosts the Cigar Lake mineralization that runs right out through our property. You can see it in the magnetics. And there is some mineralization on our ground, an old hole TBN 11-5A, 0.6 meters at 0.43%. We have had a couple of drill programs on the property trying to follow that up, that TBN 11-5A mineralization. That hasn't worked out. We haven't been able to find any higher grade uranium there. But what that means is that the rest of the targets on the property are still available. And there's terrific exploration potential here, I think. Okay, Craig. Yeah, so that's really about it for me. I'll hand it back over to you.
Good on you. Thanks, Steve. So look, there's a very good summary of what we're seeing at Hurricane and you know the program, the results we've had over the winter. Next step is to get back on the ground as quickly and as safely as we can, and move to further drilling. Partly we haven't closed off any of those sections, particularly the high grade sections. So we've got more to do there. There's a lot of exploration potential and a big wide open zone out to the east of the deposit that we've got to further test, and there could be any number of high grade pods in there. And then a little bit more exploration work on the property as well to come. We've got to do that, of course. The safety of our people and the people in the communities that we operate in and around is paramount. With this pandemic that we're suffering at the moment, we've got to look at ways of getting back in the ground safely, and we're doing that now. We've established a number of protocols that will allow us to do that. So we're confident that we'll be back out there drilling come July or August. We'll be drilling in and around those high-grade zones, those high-grade hits. And so whilst you can never guarantee good results, we're confident that we'll be putting out, some pretty good news flow when we get back on the ground come late summer. And that will all move us towards the announcement of a maiden resource. Of course, we mentioned up the front there that NextGen's share price really took off when we announced the maiden resource at Arrow. Does this happen again for us? It's a good possibility. So getting through to that point in time is critical. We're also, Steve's just hinted at a number of things we're looking at in terms of the mineability of a deposit like this. Of course, during the last boom, it were the producers and guys who could develop their projects quickly and capture those high prices at the top of that last boom that did best. Of course, Paladin being a great example, but Cameco and all of the other producers did very well at that time as well. And so we want to get ourselves into a position a little bit like NextGen, whereby if this project does support a standalone mine, that we can develop it on such a timeline that will allow us to capture some of those prices. Now, this is, of course, laden in forward-looking statements, but I'm taking the attitude today that, Hurricane, based on what we've seen, given the size, given the grade, will be a mine one day. And so how do we optimise our route to production and through understanding, all of the ore body knowledge work we've got to do, through studies and on into production? How do we optimise that? So we're doing a couple of things there. We've had Peter Longo. Peter Longo was the head of studies for Denison. Peter conceptualised that in situ leaching process or opportunity for the Phoenix ore body. So he's a leading technologist on that front. So we've brought him onto the team on contract basis at the moment. To look at all of those opportunities and do something of a trade-off study between the various mining techniques. Of course, Orano, they've got their underfed McLean Lake mill only 40 kilometres away. I should say about that mill, at the moment it's on care and maintenance because of COVID-19. Normally it's producing about or having 18 million pounds per annum run through it and come 2026, depending on what happens with Cameco and Cigar Lake, that mill may run out of feed completely. So we think that Orano see themselves as the mill operators of the basin. They produce yellow cake and they'd like to keep that mill running. So, our deposit there provides an opportunity for them to do that. So we're looking at that. And you combine that with their Sabre mining technology, we'll be obviously having a meaningful conversation with them in the not too distant future about that as well. And Peter will be looking at all of those opportunities with Steve and the team. And then the other thing we're doing there is, we're taking our lessons from development of other projects around the world. I've been involved in major gold mine developments. I built or started the construction and completed all the feasibility studies in a coal mine in Russia. So we've got, in the broader team, including with Lee and the team at NextGen, a serious track record of advancing and developing projects around the world. And we've learned a hell of a lot at NextGen there on the Arrow process, Arrow, and moving that through the stages. So we're looking to apply all of that to optimise the route through studies, ore body knowledge, and on into development if the project supports a development at some point in time. And so you'll see us doing things this summer, probably cost, a company at our stage wouldn't normally do these things, taking metallurgical test samples. We're going to be taking geohydrological samples and geotechnical samples. Probably cost an extra $150,000 on top of the exploration budget. But that, at the back end of that process, has the potential to strip 6 months to a year off our permitting process and gives us a better chance of capturing those very high prices that we think will happen over the next 5 to 10 years. So that's a little bit more detail on the work program and what we'd be doing. But come summer, a lot more good news flow to come. Just a couple of last slides, Deb. Shareholder chart there. Crucially, NextGen sit there with 52%. I'm probably not speaking out of school when I say that I think Lee and NextGen would like to own more of this, not less. I think they've been ecstatic with the results that we've had here. And Lee wants to build a major mining company. So having a suite of, or a portfolio of projects is crucial in doing that. So, and we enjoy the full support of NextGen. We raised $7 million back in December last year. NextGen put in $3 million of that, which just shows that we're fully supported by NextGen and the team. We've only got 84 million shares out. We haven't been around long, so a pretty tight share structure there. We've got $3.5 million in cash, which sees us well funded to the back end of this year. And our intention is not to come back to the market for funding at any time soon. We'd like to have the benefits of a higher uranium price and some of that summer drilling out of the way before we look at that. And because of the deals we've done, we've got Orano and Cameco there with substantial shareholdings as well. And then, some of the better known, I think that better known fund managers in the uranium sector. I know, Deb, I put you in touch with the guys at Segra. Segra, Mike Alkin, Tim Chilleri at Sachem Cove, thought leaders in the space are shareholders of ISO, key shareholders of ISO, and I think that's very sticky money. Those guys are staying in for the boom that's coming. So our free float, very, very modest, 25% of the stock in the company probably trades. So we offer investors a lot of talk whenever uranium prices rise or we put out good news. You can see the share price chart there. We're really largely flat on a 52-week basis. So that means all of that good work that Steve and the team have done and those fantastic results we've had haven't really been factored into the share price at all in this point in time. So it's not too late to get set is the message there. Steve's covered the team. I'll give Janine and Andy a shout out. Andy as Steve mentions, one of the discoverers and of the deposit, and does a tremendous job of leading our guys in the team. And then the board, a lot of familiar gentlemen then there, of course, Lee being the CEO and founder of NextGen, founding directors and founding chairman of NextGen, Chris McFadden, and then Richard Patricio, who, of course, is going to be very well known to everyone. Richard has an unprecedented track record of financing uranium projects over the last 15 years, of course. So Deb, everybody, there you have it. What we'd encourage people to look at us as is the go-to name in uranium exploration for this coming bull market. We've got the only recent very high-grade uranium discovery. We're very active. We'll be drilling come summer. We've got a team with a great track record. We're in the perfect location to have a high-grade deposit and a project that you want to develop. And with NextGen, they're owning 52% of the stock. We've got something of a backstop and a support base there to go forward with. And we're well financed on that basis. So that's it.
I'm going to interrupt you because I got questions.
Sure.
I think the audience has some as well. So thank you so much for taking us through the entire project. I think that was extremely thorough and helped me really understand what it is that you have going on in the Eastern Athabasca. But I also am a little bit confused as to what you're going to do this summer specifically. What are you focused on? Can you give us the drill program summed up? You've got $3.5 million in cash. What are you going to spend it on it? What are you going to do?
Yeah, so look, our plan there, we're still actually working through that. So, the news release we put out early this week was crucial in that. So completing, normally we get together in Vancouver around this time of the year and go through all of those results and work on the plan. Of course, we couldn't do that this year, so we've done that at a distance, but that's now been completed. We've provided some thoughts in that news release about where we go and what we do next. I suppose we haven't completed the full planning process and budget yet. We're still talking to the board about that and working on that as a management team. My expectation would be that we probably launch a campaign, somewhat scaled back campaign. If you had your druthers, you'd have 4 rigs out there going around the clock as soon as possible. But here, I think, we've got 2 rigs on the ground at the moment, sitting out there ready to go. A modest campaign of, somewhere between 10 and 20 holes, factoring in all the COVID-19 protocols that we have. So, somewhere in that order would be the idea. And we're well funded for that work as well. So we're in a pretty good position. And then that leads into the maiden resource work. We possibly need another winter campaign next year as well. And that will, we would expect to announce a maiden resource probably in the first quarter to half of next year.
Okay, and I'm assuming that the raise that NextGen did earlier this week probably bodes well for you guys getting a little bit more capital, if so required.
Yeah, that's right. We don't have to look too far. I'll sort of, Lee lives not too far down the street from me. I'll certainly be talking to him about that. He's got 80 million in the bank now. So, we're very well supported. And
So one of the things that I found really interesting, because I watched a lot of Craig Parry interviews leading up to Uranium Week.
Poor thing.
I know, it's terrible. But I am just stuck in a condo all alone, so I had nothing better to do. So one of the things that you say, you've got a catchphrase that you used on your interview with Matt, and when you really broke it down, it made a lot of sense to me, which is size of the prize. I'll let you walk through it, and I want you to think about that, but also I would like you to put that in the context of IsoEnergy, and what are the targets that you think have like a commercial focus without ignoring the technical focus, because that's the whole gist of it, right?
Yeah, you're spot on. That's a really good summation of that saying. So the saying, the catchphrase is size of the prize, cost of the test, and chance of success. And that, I had that the head of exploration when I joined Rio Tinto. So I should have said that I'm an exploration geologist by trade. I spent 8.5 years with Rio Tinto exploration in various roles around the world. And, prior to 2000 or sort of 1996, 97, Rio Tinto had massive exploration budgets and they just threw money at the problem. David Klingner, who unfortunately passed away a year ago, David became the head of exploration, and he overlaid a hardcore layer of commerciality to the exploration business. And Rio Tinto has been unprecedented in their success in exploration in the last 20 years. They've made a tier 1 discovery that they've handed to their product group every year for the past 20 years since David took over that role. And drummed into people size of the prize, cost of the test, chance of success. And so in summary, and that's how, we look at everything when we do these things. So, you look around for an exploration project or target globally in terms of size of the prize, you want to go to places or be looking for deposits that have scale and can support a major mine. And of course, small mines take up just as much time and are as problematic as big mines. So you want to go for things, big deposit types. And, Athabasca Basin ticks that box. The 2 biggest mines in the world are right next door to where we are at our Hurricane deposit. So size of the prize. Cost of the test, you want to go to places where it doesn't cost you too much money. You don't want to be drilling, drill holes down to the moho, and you don't want to be going to really difficult places where it's highly costly to do that exploration work. And of course, the Athabasca Basin ticks that box in a major way. We're surrounded by all of that fantastic mining and exploration infrastructure. Access to drill rigs is cheap, and our Hurricane deposit at only 320 to 330 metres depth means we're only drilling relatively shallow holes. So cost of test ticks that box. And then chance of success is all about prospectivity. You want to be in places where there's known endowment, high probability of discovery. And of course, the Eastern Athabasca is absolutely the best place on the planet to explore for high-grade uranium deposits. I should include the southwestern Athabasca in that as well, because of course Lee's led the charge down there and discovered something major there as well. So that's how we look globally at opportunities, if you like, and targets locally as well.
Can you rank your projects and targets based on what you just told me? And your capital limitations, obviously. Maybe give us the top 3 to 5.
Yeah, absolutely. And Steve, feel free to weigh in here. But what I'd say to you is that, number one priority, number one with a bullet is Hurricane. That's where, we've got a deposit. We give offering our investors best bang for their buck. We know we're going to hit mineralisation there when we go back out there. So that's number one. I suppose to my mind, Steve, that Larocque East Trend now has a sort of string of pearls type analogy, string of deposits proven up along it. You've got Larocque Lake Zone, which is on Cameco's ground, 6 kilometres to the southwest. A kilometre to the west, you've got the Larocque North Zone that's owned by, again, Cameco and Orano. You've then got our Hurricane, and then out on that eastern extension of the Larocque conductive trend, there's a number of mineralised intercepts along there as well. So we know it's a fertile trend. It's got major deposits, significant deposits on it, and plenty of other targets. So I think, to my mind, that's number 2. Steve, number 3, 4, what else would you add?
Yeah, I think Geiger certainly comes in right underneath of that, right, with all of those intersections at the unconformity that haven't been properly followed up. So, yeah, Geiger's in there. And then, you have to go with Radio and Thorburn Lake. After that, there's still super exploration properties, and, not least of which because they are both close to some serious mineralization, right? So.
Yeah, very good. Thorburn Lake, it sits on the structure that hosts Cigar Lake, and we're only 6 kilometres from it. What a fabulous target.
Yeah.
Well, it seems like there's a lot of amazing targets in the Athabasca and a lot of high-grade potential, a lot of potential deposits, which always makes me think, like, how many large-scale deposits can the market really support? And how many can be developed before you start eroding your own long-term long-term commodity price? What's your best guess?
Oh, look, it's a sort of fairly complex answer, I suppose. Because Kazatomprom, we think that their wellfield life is running down. There's been something of a natural attrition there. Of course, you need massive new continual investment in wellfield development to keep those projects running at the pace they have. That's, to my mind, the biggest threat, though. Cameco, great projects in Cigar and MacArthur, albeit that they're not economic at the moment. So MacArthur, of course, closed. We think the all-in sustaining cost of those projects is significantly north of where today's price is. And those projects run out of really past their mine life come the middle of this decade. And so, there's a massive looming supply gap coming. And, our projects, I think both NextGen, what Lee's looking to do, and what we'll be looking to do is try and fill those supply gaps that are emerging on that sort of time frame. So we're not worried about that at all because of that drop off in production. And I think, talking to Mike Alkin at Sachem Cove earlier this week, he was telling us that to bring those projects that have been mothballed back on stream, we've got to see $50 or $60 a pound uranium. The average incentive price for all of that other production out there is about $70 a pound. Well, it's far too early for us to talk about what production costs would be from any of our projects, of course. But for Lee, his all-in sustaining costs, as per his studies, about $13 a pound. So the incentive price to keep production at a sustainable level to meet all the demand out there has got to be about $70 a pound. There's a hell of a lot of margin in there for projects like Lee's Arrow.
Yeah. Maybe if I can just add a bit there. I mean, the world market for power generation, right, is about 200 million pounds a year. So it's consuming a cigar lake. The world's consuming a cigar lake every year, basically, right? So there's a big need for large, high-grade deposits coming up for sure.
We're just over the hour, but I have a couple more questions, and there is one in the Q&A for the participants. Feel free to add some in, but I actually have two different directions I want to go. So I'm going to go Cigar Lake. So talking about Cigar Lake, they're shut right now due to COVID. But one thing that's been said, I think you said it in one interview, or maybe it was Lee, kind of all bleeds together at this point, was that they were shut for safety reasons, but they'll only be restarted for commercial reasons. Do you want to talk a little bit about this and why it's, in my opinion, likely that Cigar Lake stays shut until probably the fall, at least?
Yeah, look, and Grant Isaac from Cameco, I think he did a call with BMO yesterday, and I haven't had the time to look at that just yet, but I plan to this afternoon. So I'll be keen to hear what he has to say about that. But our understanding is that, you know, they've done the absolute right thing, shown great leadership, and that's something Cameco, I think, is very good at. They show industry, strong industry and provincial leadership, you know. So they've taken the right steps there to mothball production, but we think that, you know, they need much higher prices. They've been very clear about that. They need to see $50 a pound before they'll start writing long-term contracts. So it gives you a bit of a hint as to what their cost base might be. And I think, you know, both Kazatomprom and Cameco are very happy to keep that production offline until they see prices get to a point where they can write those higher $50 plus long-term contracts. So I think absolutely that's where we go in the near term. And in terms of spot price as well, with all of the, particularly Kazatomprom taking its product out of the market, what we do know, and you know, we've seen this, I've been in the mining sector for the past 21 years. One thing I know is that prices always overshoot on the upside and overshoot on the downside as well. So if they're looking for a $50 uranium price, don't be surprised if we see prices shoot well north of that in the not too distant future as well.
One of the things that I learned in my research leading up to Uranium Week was that Cigar Lake is shut in the summer anyway, in July and August. Is that correct? I believe they don't mine during those 2 months.
I don't know that. I know that going back
with the technique, they have to freeze. I don't know. I didn't get that far into it, but apparently if they don't go back into production in the next 2 months, it's not till September anyway.
Oh, that's interesting. I wasn't aware of that. Yeah.
Am I the Uranium Week expert now? God help us. God help us all. With that, I have one more question. Then let the audience ask questions, because apparently I'm just answering my own at this point. I had one for you, Steve. You mentioned Rough Rider, and I remember when that transaction happened. It actually was bought by Rio Tinto, your former employer, Craig, so you might be able to weigh in on this. And I was surprised to hear that they've absolutely done no development on it for the last little while, and Arrow's actually further advanced than Rough Rider at this point. So do you know what their intention with Rough Rider is? Are they going to sell it? Are they just inventorying it?
Yeah, so I mean, they certainly did some drilling on it after they bought it, and I think they had some expectations of making the deposit quite a bit larger, and I think that just didn't actually happen. So yeah, so there it sits. And Craig, any idea on what their intentions are there?
Look, not too sure. I think that's right. It hasn't met their investment hurdles. They've certainly not advanced in any way since about 2015. So, it's not far from us. It's an interesting deposit, certainly. But outside of that, don't know.
Okay. And then I had a question from the audience, which was, do you have any analysts covering the stock? And I think it's just Colin Healy at Haywood. Is that correct?
Yeah, good question. Look, Colin hasn't launched formal and full coverage on us, but he does put out notes and he's watching it very closely. And, Colin's an exceptional analyst. He was very early on to the Arrow story and I think made a lot of money for Haywood's investors there. So, Colin's a good guy to follow and keeps a very close eye on us. And look, Dave Talbot at 8 Capital, of course, another very good analyst, and Dave's got a long history of in the uranium sector. So Dave's looking at us very closely as well. I think we'll be doing some marketing at the end of the month with 8 Capital as well. So we enjoy some support, but again, no formal coverage just yet. I think that comes next.
Have you seen a lot of the analysts start to ramp up on the sector in the last month or two?
Well, look, unfortunately, there aren't many of them left. Dave Sadowski was another good analyst. Dave went into banking, of course. Katie LaChapelle at
Canaccord.
At Canaccord, she's doing a good job there. We talked to her a fair bit, and we're hopeful of getting some support there at the right point in time as well. Look, and the bigger guys, the bulge bracket banks, we see TD have increased their target price for next gen, and I think for uranium generally. So everyone's turning bullish. Absolutely, there's no doubt about it. And I think we touched on this at the start. The thing that's surprising, well, not surprising, but is very positive, is that we're starting to see generalist funds, start to get interested in the sector again. As you know, Deb, I was a co-founder and partner still am a partner actually, or an investor in EMR Capital. And our friend Rob Curtis there the other day asked me for, can you give me something of a primer on uranium? Because even the big, now that's a $2 billion fund. The big private equity guys are starting to show some interest in uranium. So, we can see a wall of money coming in the not too distant future.
Well, I think one of the issues, I don't want to say issues, but one of the problems that you're going to have at ISO is that your large shareholders NextGen. So many investors get exposure to your company through proxy through them, right? So to go out and find the investors that will invest directly in ISO is going to be a little bit more challenging than just, most people that I talk to leading up to this, they're like, yeah, I own NextGen, so I own ISO.
So I'm already long. Yeah, that's right. But what we're finding is that even though a lot of those guys that are heavily invested in NextGen, for a bit more alpha and a bit more exposure to the sort of higher risk, higher reward exploration side of things, they are coming over to us and investing in us. If any. We've been offered a number of financings and bought deal opportunities in recent times that we've knocked all of them back at this point in time. But I'm astonished by how much interest and how much money is out there for uranium right now.
Well, the other thing that I would point to, and what I said to the people that said that to me, was there's actually a trade arb between you. NextGen's done better over the last month and a half than you have. So it should be a lag trade. And sure, it's a little bit earlier, more speculative, but you haven't had that maiden resource, which was a huge catalyst, as you referenced earlier, for NextGen.
Yeah, that's right, and it's fast coming. I think it's quite hard for investors to get their heads around uranium and uranium deposits. We throw out those gold equivalent type numbers to help with that. Now, you can't put that in writing. The exchange and regulators hate you doing that sort of thing, but, it really helps people get their mind around how high grade these things are. And of course, I remember when we were doing the work there on Arrow pre-resource, Steve and I were just talking about this last night. I think, a lot of people in the investment community thought that deposit would be 60, 80 million pounds type of thing. It turned out to be 160 million pounds, that maiden resource, of course, with that very high grade 100 million pound, 19% high grade core. Now, I'm not saying we have that ourselves, but I think there is a propensity to underestimate grades and ton and size of these types of deposits. And so, there's a real opportunity there, I think. We'll see how the summer drill campaign goes. That'll lead into working out whether we need a winter drill campaign before we announce a maiden resource. But we're on the verge of of that kind of breakout, I think.
Well, I think it's a really interesting story. I'm glad that I spent a lot more time on uranium over the last couple of weeks, because I think that you really have a fantastic asset. So congratulations. You're not just fun to hang out with, Craig. You actually know how to companies. I have one last question, and it's, since you don't have formal coverage, and there's a lot of people that don't know this sector, and really this rally's happening in a really skeptical market. Like, there's a lot of naysayers. There's a lot of people that don't want to invest in uranium because they've been burned on it. They're not going to put the work and the time into figuring out how to value you. So I think one of the challenges that you're going to have, and one of the things that maybe we can help with and awareness will help with, is how do you value your company? Like, if they're not going to if investors aren't going to value it or spend the time trying to figure out, how do you look at the value, like the intrinsic value in IsoEnergy? How do you define that? How do you express that?
It's a very simple answer. It's worth a hell of a lot more than where we're trading now. You know, it's a fair question. I think, you know, it will help to have that coverage at some point in time. You know, we mentioned there that we want to get a maiden resource out as quickly as we can and start looking at, you know, all of that ore body knowledge work that needs to be done and moving on with the studies. And then, you know, so we're potentially a year and a half away from having a PEA out. Now, that will help people establish the value. That we've got to get to that point. You know, in the past years gone by, people sort of applied dollar per pound metrics to resources, things like that. Well, we're not even at that stage yet. So, you know, it is a problem. It's a tough thing to do, to value exploration potential. I think, you know, compare us to NextGen, where NextGen was at. To my mind, a $50 million market cap seems very low.
Yeah. Okay. Well, I won't bore you with any more questions. I don't see any more from the audience. So I'll just say thank you very much for participating in Uranium Week. In, I guess it's 1 hour from now, we have the full panel, which will be super fun. We'll have some harder questions for you there, because somebody smarter than me will be asking them.
Is there someone?
Yeah. Most of my team and most people I know. But thank you very much for taking the time to sit down with us. And thanks for everyone for participating. And I'll see you guys in an hour.
Good on you. Thanks, Deb. Thank you, everyone, for tuning in. Much appreciated.